Taking a look at the interest rate environment today, I want to focus on the 10-year note. Some selling pressure in the 10-year note today. We saw it down, not too pronounced given the magnitude of some of the news items that hit the market today, but we did see some selling pressure coming out of the G20 announcement. So we saw the 10-year right around the 127.22 level for the day. We saw a high of 127.31 earlier in the day, and then a low in the middle of the day around 127.17. And primarily the reason we saw this selling pressure today, I think, was due to the fact that the positive tone that came out of the G20 meeting. We saw the equity markets catch a very strong bid overnight. It parlayed itself into this morning's opening. And with that, we saw, again, some selling pressure on the bond space when we saw most of the major bond instruments lower for the day, primarily as we saw, again, a rotation, I think, out of what was perceived as maybe some more risky type of allocations and out of the what they call the safe haven type of plays. And I think part of the reason why we saw some moderation in the bond space. I want to point out one thing that I found interesting today. When you look at the price movement within the bond structure, we definitely saw heavier selling pressure on the front end of the curve. And when I look at the 2-year note, we saw that was really where the most significant selling pressure was realized, all the way through the 2s to the 10s. The 30s not so much, but when you look at the 2s through 10s, that's where the selling pressure really was magnified. And I want to point out that we did see that the curve flattened slightly today, and I think that's something that a lot of market participants have been pointing at in the last year and talking about. And I think the one thing that I definitely focus on is that 210 spread. And again, nothing too pronounced here, but we did see today at least a stemming of the tide right now, where we saw that yield curve flatten a little bit. It went from basically 26 basis points down to 24 basis points today. So again, one day does not make a trend, but something to keep an eye on. If we continue to see some shifting in the dynamics now that we've got the G20 announcement behind us, now that we've got maybe some dialogue taking place between China and the U.S. and some of the other issues that the market was concerned about out of the way, it will be interesting to see how the yield construct starts to move now that we move towards a Fed announcement at the end of this month. But ultimately, is the market going to get enough of a move by the Fed that will maintain the current structure within the bond complex?